Hello, my name is Rupert Pontin and I'm Head of Insight and Communications here at Brego. Welcome to the October Brego Auto Intel broadcast, in which we're going to have a look at what happened in the UK car market over the past few weeks, as well as a short summary of the economic and political position that has impacted the UK auto retail sector. So let's get underway. The economic update. At the time of writing, the Bank of England has just announced that the base rate is going to remain at 4%. However, it is now rumoured that there will be another drop before the end of the year, which had previously been ruled out. Now, apparently, despite the fact that the rate of inflation has remained the same at 3.8%, there are expectations that the rate will drop in the coming months, thus influencing the Bank of England's decision, which is obviously positive news. Unlike the previous month, though, consumer confidence has improved by 2 points, despite the fear of the now almost guaranteed tax rises in whatever form they come in the budget on November the 26th. Some reports indicate that this confidence is coming from the upcoming Black Friday sale events, although it is noted that underlying inflation in certain sectors of the economy have already started to decline, and as a result of that, they're expecting it to gather momentum in the coming weeks, which again would be good news and a relief for the consumer. The negatives, though, are firstly the drop in business confidence, which has gone from -31 to -27, although this is in line with the forecast that they gave previously. So it is set to rally a little bit during the final quarter, probably to about -29, and then improve in 2026. And we're likely to see actually business confidence trending at around -18 during 2026. The second negative is the drop in the instant access savings rate, which will not encourage our savings. However, by design, that may help the economy by encouraging us to spend more. Finally, a quick mention of the unemployment rate. That has grown by 0.1% to 4.8%, which was actually lower than had been predicted, and is actually set to be a blip before it returns to 4.7% in 2026, maybe back down to 4.6%, but we'll just have to see. Looking at the new car market, and this is data courtesy of the SMMT, it's been a difficult month for the dealers, but it's certainly not been a bad month. It was broadly similar to October last year with challenging inquiry levels, but there has been increased discounting, which has been prevalent on some models. Of concern, though, is that pre-registration levels have increased significantly, and more on that a little bit later on. Overall, new car registrations were up 0.5% in comparison to a 13.7% increase last month, and that is in comparison to October 2024. And year to date, the market is up by 3.9%, which is slightly lower than the 4.2% in the previous month. Private registrations were up 8.9%, which is a 38.6% market share, and that's 0.6% better than last October. And year to date, it's up by 4.6%, which is a total of a 38.8% market share. So a little bit of positive there, although we do still need to see more private registrations. Fleet registrations are down by 1.5%. That's converse to the 16.9% increase we saw in September. And the market share sits at 58.9%, and that's down 1.2% on last October. Year to date, it is up by 3.3%, so that's a positive, and that's sitting at 59% market share, which is 0.3% better than it was in October 2024. Now, looking at EV sales, ever important, up by 23.6%, and the market share for October was 25.4%, so edging further towards that 28% that is the target for the year, and that's 4.7% percentage points up on last October, and overall year to date is up by 29%. Which is positive. In terms of plug-in hybrid, that's up by 27.2%, and that represents a 12.1% market share, and that's 37.1% year to date, up with an 11% market share year to date. Petrol registrations are down by 11.6%. That's off the back of a 2.4% increase last month. And I think this is probably because consumers are shifting towards hybrid and EV models, and we're likely to see that continue over the coming months. Diesel down by 22.9%, no surprise there, and that's a 4.8% market share, which is down just 1.4 percentage points on last October. Last month, it was down 2.4% on last September. From an OEM perspective, the top three, Volkswagen 9.1% of the market, Audi 6.4% of the market, and Ford at 6.2%. So Audi and Ford have slipped in at the expense of Kia and BMW, who had some pretty low registration figures for the month, given their recent performances over the last few months. The top 3 selling cars: Ford Puma, Kia Sportage, and the Mini Cooper. Okay, there's only one Chinese model in the top 10, which is a little bit of a surprise, and that is the JQ7, which is in 6th place. Now, whilst we're talking about Chinese brands, the Chery Group sold over 6,200 cars during the course of October, taking a 4.3% of the market overall. Now, that's across the 3 brands. That's Chery, that's JQ, that's Moda. Its closest rival, BYD, took a 2.4% share of the market, whilst Tesla took a very, very small 0.35% and were outperformed by both Polestar and indeed Leap Motor. Looking at the UK used car market from Brego, that's whole market information. We see up to 1 million data points, sale prices every day. In terms of total adverts during the course of the month, they were up by 10.4%. Now, that's off the back of a 10.1% increase last month as well. So once again, that either indicates a slower market or that there is more used car stock available in the marketplace. And I think there is evidence of that. But the big thing here is the number of pre-registered adverts. We saw a 60.5%, yes, you heard that right, 60.5% increase in pre-registered car adverts. That's vehicles advertised that are under a year old and have done under 500 miles. So that is quite a big jump in registrations. I can't see that happening again next month. We'll just have to see how that goes. But it's clearly people pushing older new car models into the market before the 2026 models have arrived. And it's probably a push for the end of the year, particularly around EVs. And we know that certain models, EV models, were very heavily sold in the marketplace. New, for example, Volvo XC30. Were pushed very, very hard. And it's interesting to note that some of the high-end premium brands, German brands, are offering over 25% in sales support on certain cars. So watch out for those if you're in the market for a car. Trade adverts were up by 11%, and that's off the back of 7.9% increase last month. And are there really more cars available, or people just advertising more vehicles? We know that the Motors platform certainly has specific offers to get cars advertised. Maybe there are other platforms that are doing something similar, so that could explain why there are more cars being advertised. EV adverts were up by 12.3%, and that still appears to be off the back of good demand from the consumers. So there are more cars coming to marketplace, but they're still finding homes with the consumers. So that's a positive. Hybrid adverts are up 17.4%, and that's kind of in line with the expectations we have off the back of new car sales over the past couple of years. Petrol adverts were up by 9.3%, and that's off the back of 6.8% increase last month. So another big jump there. Now, we think that's due to it being its fleet stock. It requires a really deep dive into the age and profile of vehicles that are being advertised, which we haven't done for this exercise, for this update, but it can be done using the Brego Insight AI facility within the Brego platform. In terms of days to sale, we're now down at 28.1. And that's a drop from 29.5 in the previous month, which is interesting because despite the fact there are more used cars in the market for sale, and that would suggest it's a seemingly slower market, that obviously isn't the case. What is interesting is the EV days to sale overall are now at 28.3. So in reality, pretty much the same as fossil fuels, but there are some polar opposites within that data that can skew it. I think realistically, if you take out some of the real high-end vehicles, you probably find those EV days to sale to be lower. The average used car price went up by 2% to 18,314, and the average EV price went up by 1.4% to 27,070. And I think probably that suggests there's some good market pricing stability for EVs in the marketplace. So in summary, October was a challenging month, but it's not the end of the world. There were fewer inquiries, yes. Customers were harder to close, yes, but the results were still there. So the dealers have done well, and they've maintained their business strategies. Despite an upturn in consumer confidence, fear of the budget, though, has been cited as the driving force behind the more reluctant consumer retail buyer. Government messaging has also been complex and confusing, and that has given an element of fear to both consumers and businesses alike, because they just don't know what's coming down the line on November the 26th. Vehicle condition was important in the wholesale market. Dealers are looking to buy cars that need less work doing to them, less mechanical work if they can possibly avoid it, making sure that they're maximizing on their margins, and they are looking for high margin opportunities. And with more stock in the marketplace, they've been able to be a little bit choosy over what they buy. Now, that's an important point for those of you that are remarketing vehicles from the fleet and leasing sector and older part exchanges. Make sure they're in the best condition possible when they go through the auctions. Now, there are more cars available in the wholesale channels for sure, but the auction word on the street is that the auction conversion rate is still pretty good for this time of year. Chinese new car sales have continued to grow. We talked about that a little bit earlier, and it's important to acknowledge that those cars will start to come back into the used car market, and those Chinese brands are putting in place some pretty good remarketing operations to cope with that when it comes. So today's been a good summary of the October market, but if you want more detail, be sure to read the Brego Monthly Car Insight Report, which can be found on the LinkedIn page and on our website, or if you want, just reach out to me and I can send it to you. We're also starting to post insight and market snapshots on Twitter, X, whatever you'd like to call it, and on YouTube in the coming weeks, so watch out for those as well. And finally, I just want to reiterate that if you need or you want to understand and improve your market insight, then and you want to really explore the nuances in today's UK auto sector, then you really need to speak to me or the Brego sales team, who'll show you how the Brego pricing platform and the market data will help you to improve understanding and ultimately increase your profitability. Thank you very much for listening. See you soon.